29.31. Hey guys, you out there in Vegas at the roulette table. 29.31 are your lucky numbers of the day. Just playing, guys. But if you're in Vegas and you're at the roulette table, okay, maybe a good idea to leave the roulette table right now and go to your computer or go log into your 2D Ameritrade and start buying some puts. Leonardo, you're crazy. Just the other day you said buy calls. Now you're saying buy puts? Can you make up your mind? Guys, we're day trading and swing trading here. The markets are moving and you should be taking advantage of each and every opportunity. But I've noticed some suggestions, some comments like, hey, can you tell us what's going on every day? Guys, we do tell you what the hell is going on every day. All you have to do is click the link below and subscribe to the 13 Market Moves Daily Analysis. That way you wouldn't miss out on any trades. Okay, with that said, I am going to give you on one super important secret right now. This number is 2131. Some of you are thinking, Leonardo, you're making this stuff. You're pulling a rabbit out of your head again, 2931. What would be the importance of that? Well, if you were the subscriber for our 13 Market Moves Daily Analysis, we actually introduced that number, 2931, to you over the course of the last 3 days, pointing specifically to a really great entry on the put side. Now, notice the last video that was shared on the channel was us actually being bullish. How did we actually nail the bottom again? How did we do it? Damn it, it's the 13 Markets Move formula. You should know it by now. That's how we nailed the bottom in December of 2018 as well. So now, since we posted the video, the market's been up for a couple of days. Why would we want to buy puts? In this video, and I'm traveling, guys, so I'm just taking a quick moment to record this real fast and just bring out what I think any trader should know before you pull the trigger on any trades. So first, you kind of clearly understand the direction of the market and what could be happening the next day or the next couple of days. So with that said, the easiest thing that you should be observing as a trader is the levels on the charts. The levels on the chart are super important, guys, because understanding how to trade the certain levels on the chart will help you select the strike price, the direction. It will help you overall evolve into a better trader literally overnight. So I'm going to share this really cool secret with you about what's about to happen next by simply walking you through this chart. And which chart? Well, guys, the easiest chart ever. The chart everybody's looking at, the chart of S&P 500. So here it is. Let me zoom in here and actually show you specifically what we're looking at. And the most important part here, take a look. This is a chart right now. It's about 2:40 in the afternoon on August 8th, 2019. And the important thing is this magic number of 2931 would coincide with this big orange dot right here, guys, that I'm pointing to, which would also coincide with this 50-day moving average, or the blue line, would also coincide with the most crucial aspect on this chart, which was the gap down that was created not so long ago. So remember when we dropped in S&P 500 from this level of 29.30, 29.40 all the way down to the just below the 2900. So this gap right now actually is being closed today. However, in most instances, not in every instance, but in most instances, these gaps, once we run up against that gap that was created on substantially higher volume, okay, we're going to pause. Now, that is the very least outcome, is the fact that we are indeed going to pause without just breaking out higher from there. In very rare instances will you have a continuous move higher. In certain instances, you'll actually have an overshadow or overshoot, whatever you want to call it, by a few points, and then you'll have a reversal and a possible retest of this 2900 level. So when we posted the last video of starting to buy calls, you could have just stayed in this trade for a swing trade for about 72 hours. And right now, if you were a member of our 13 Market Moves Daily Analysis, you would have known that we've recommended for our members to close out their bullish positions right at this level of 29.31. 29.31 is the number that signifies that above this level, it's going to be very tough for the market to continue its bullish momentum. And we're not saying a crash is going to take place from here, but rather a pullback is very much reasonable. So following the 13 market moves sequence, what this really tells us, despite of all the bullish action, and what happens when you turn on the news today, you're going to be talking about, oh, how everything is good again, how everything is wonderful. Well, this should make all the bears happy. If you just want to put a quick trade, as far as a day trade to a swing trade going into tomorrow, the market tomorrow will open with a gap down. Now, the magnitude of the gap down shouldn't be very significant, so do not be buying a ton of puts out of the money. That would not be a wise strategy. But buying puts in the money going into tomorrow's opening is a very nice and easy strategy that's going to allow you to collect some quick and easy gains. Now, with that said, how do we determine the level of the pullback? Okay. So sometimes in the recent history, and there's been plenty of instances where the market has gapped down, gotten close to a gap, expect a twit, expect some kind of news to happen overnight that will actually cause the market to gap down. It happens very often as if the market participants are timing, just like Trump timed the message with the tariffs. He actually put out that tweet exactly the following morning after the Federal Reserve cut the interest rates. Okay, so we're not expecting any huge improvement. In other words, we're not expecting for the market to rally back to 3,000 level here overnight. We do believe that the market conditions, just as projected over the last month in many videos we have posted, the market will move higher. It's just most of the people have a tendency to underestimate how quickly that move is actually going to come in after this sharp pullback has taken place. So as many traders and investors are dropping their guard down today, what is indeed taking place in the market is we're hitting a certain level that tells us that there is going to be a pause in the move higher. There's actually going to be a high probability of a pullback from here. Now that actually coincides with all the bullish comments that they're talking about in the news. So the natural conclusion that I want you to make as a trader, just sharing some of the information I've shared with you so far, is this. Do not pay attention to the news. Rather, focus on looking at certain things on the chart. And generally speaking, we recommend any trader to look at least 30 charts a day. In the next couple of weeks, I'll post a video, 7 Habits of Highly Paid Traders, that will underline specifically the 7 habits that I would suggest any successful trader would go through on a daily basis in order to materialize some substantial traction in their account. So keep an eye. If you're brand new listening to this, subscribe to the channel, click the notification bell, make sure that you wouldn't miss out on some cool information that will be coming your way here shortly. But for the purpose of this video, guys, just make this observation that you're going to be much better off trading any type of market with a better understanding of what is actually taking place on the chart instead of just blindly following the news. Oh, they're bullish today. Let me buy some calls. Well, they weren't bullish Monday when we were telling our subscribers about the reversal. Okay, they weren't bullish on Tuesday when we said, hey, get into some swing trades for a couple of days and make sure that you're collecting some money on the bull side here. They were still bearish. So what the news is going to do for you, they're going to talk about the stuff that has taken place, and then they're going to talk about it. So clearly that does not give you any competitive edge. So if you want to advance as a trader, you want to identify the edge, and the edge literally comes to us from the divergences on the charts, from the 13 markets move formula. So if you really wanted to learn the entire program, not just a little bit here, a little bit there, a little bit, if you want to get the whole program that really is going to allow you to trade like a pro, then click the links below. Take advantage of the courses we've recorded for you guys. With that said, I wish you a great trading day. The rest of the trading day today, depending on when this video actually going to get posted, right now is 250. But remember, 2931 is your number. So when things get up there, short it. When things get back to 2900, reevaluate your strategy. It's time to collect some profits and gains there. And depending on the volume, okay, and that's a subject for a whole nother video, but how do you determine whether that level is going to be broken or not? It's by making observations about few factors, and I'll try to post it in the next video. So with that said, thanks for watching, guys. I'll catch you on the next trade tomorrow.